This week was all about tariffs and jobs, and both really stirred up some serious movement in the market. So let's just start with tariffs. China today announced new tariffs on U.S. goods in response to the tariffs Trump announced, and the stock market sold off hard in response. And there's just concern that this trade war could escalate, and on the other side, if it ends up being short-lived, then the markets will calm down. The one bright spot, totally separate, but Canadian lumber is exempt, and that's a huge win for builders and new construction. And on the jobs front, the headline payroll number looked strong, and that beat expectations a little bit. But when you look under the hood, there's really weakness in that report. Unemployment ticked up a little bit. Wage growth is slowing, and people in their prime working years, that's 24 to 54, they actually lost jobs. So most of the job gains actually came from younger, lower earning sectors. And that kind of shift is really a sign that the economy is starting to cool. Because of that, rate cut expectations from the Fed are increasing. The markets are now betting on 5 cuts this year, with the first possibly as soon as May. And it's really worth noting also that oil prices dropped to their lowest level since May of 2021, which is good news for inflation. The Fed is navigating kind of a tightrope between mixed jobs data and, just global uncertainty at this time. But the bottom line is right now there's a lot of volatility, but for mortgage rates, volatility, might actually be helpful, especially if inflation cools and the job market continues to show cracks. So I'll be back next week, just report on how the inflation reports come out. We'll get CPI and PPI, but hope for lower numbers there just to continue the rally that kind of helped rates this week. But I'll be back next Friday again to chat about that. Have a great weekend.